Hey guys, it's Simon coming to you from Barbados. Good evening. Hope everyone had a great weekend, great Thanksgiving, and that everyone did, those who did trade on Friday, that y'all did well. I heard from a couple of people who got the, I think it was 2080-82 zone that I had down here on Friday, and a couple of people got that and had a very nice rotation back to the upside. Again, focusing on the long side has been very helpful for us for the last couple of days. Wanted to cover real quick my plans for the morning. I am opening the room very, very early. I am uncertain as to how stable the internet connection is, how good the audio connection is on GoToMeeting from here, or how well the picture will carry on. I plan to open the room early in the morning. It is 2 hours earlier here, so normally in Dallas the market opens at 8:30 for me. It opens 10:30 a.m. here, which is great. It gives me time to get out. High tide comes in at 6:30. Hopefully I'll be back here by 10:30. And then I plan to cut out at New York lunch for the rest of the day. And that's how I'm going to run the majority of my week. Not sure that'll work. It's a very slow pace here. The roads are very tiny. They drive on the wrong side of the road. And they drive very, very slow. And there seems to be no direct route anywhere on the island to get to any one point, which is all fine for island life, but not so good if you're trying to hurry to get from point A to point B. That being said, the room will be open, and I will get in here as soon as I can, and we'll do the best we can for the week. I expect actually to have a pretty good week, and the reason I expect to have a good week is if we'll run over and look at the volume profile here real quick. Okay, so you can see both in ES and in Q. Let's see if I can pull up Drawing Tools, View, Toolbars. Let's see if we can get this. I don't know why this resets at the time. There we go. Okay, so if you look, we have a very good consolidation right there. This is building energy, right? We have a pretty clean consolidation on NQ, right? So let's back up for a little bit since we've been in a holiday week and kind of take a look at the bigger picture, right? So on NQ, our adjusted year-to-date high is sitting right here, okay? We had an open gap here that got closed at the beginning of last week, and that resulted in rejection. And you notice, it's slow motion. Usually this rejection, actually this was caused by a news event. That was, okay, so this tells us a couple of things. Let's go through this. We've got we have the year-to-date high. This is the Russian event, right? So we can see pretty clearly that people discounted that Russian jet getting shot down in Turkey, and the market came right back up. So usually when I see an event like this and leaves a tail like that, I just X out this action here, and I assume the consolidation sideways here. So that's 1, 2, 3, 4, 5 days of consolidation. We are due for a strong break, or a otherwise known in parlance, a volume profile, for a move out of balance, right? We had something similar here where we had 3 days of consolidation, and usually the most powerful of these occur when we get a gap up or a gap down, and this is actually a perfect example right here. If you go back to the 9th through the, looks like the 14th, this is a perfect example of a consolidation and move out of balance to the downside, right? So we are due for a big move out of balance, and that means, for me, right, I don't have the predictive ability to know, oh, it's going to fail or it's not going to fail. So immediately I know if we gap up, I'm looking for open drive higher or open drive lower, right? I'm immediately looking to see, are there rotation and counter rotation within the moves? In other words, are we going up 10, right, and then coming down 1.5, 2 points, and then setting up for another move there? If this occurs, I want to be very cautious on the shorts. Now, I know that I've been cautious again and again on the shorts, and you have a week like last week where you're like, hey, Simon, both sides of the market work very well. My suggestion is to avoid having a short-term memory. Just before that, we had a very powerful move to the upside, right? And any shorts in this area pretty much cause you a lot of pain in this area. And I'm afraid we can get another move back to this upside or to the downside, but in this same exact spirit. So if we gap up, I want to be cautious with fading it, right? Particularly if we gap above and hold above that 2094 and 3/4. I want to see it below 2094 and 3/4. Why is that? Let me go into that really quick. If we look to the left, you will see that there was a series of closes right here. Right? See all these closes? With the exception of one, right? Where we closed at about 2094, right in here, right? And you can see that's correlating to the top, okay? If we can get a close above this area, it opens us up to take care of all the stops that are trading up here. So I want to be clear here. If we can get above this, basically 2094 and a quarter here, and we have an overnight high sitting at 2096 and 3/4, I believe. If we can get over this little lip right over here, you just have to believe there's a ton of stops sitting back here that can be taken out and give us the juice to push higher. Also, if we take a bigger look, right? See if I can manipulate this well. And we push back. I try to call in the head, dangerous that is to do. I try to call in the head of other traders, right? Remember, it wasn't too long ago, right? Just the end of November. Early October, we were getting bone crushed down here below 1900 on ES. We pretty much pushed up and never had a 50-60 retrace, right? So if you look, and this is again why I stress, trades alongside, even in what appears to be a bear market, are usually easier than focusing on the short side of the trade, right? So if we bring this up, now most traders, not all, but most, so bear with me, it's just running a little bit slower than normal. Most traders are going to look at this and go, hey, we should come back for a test of this 50-60 retrace. And there's one or two ways to look at this, which would be correct. If we have an inability to close above this series of what ended up marking out essentially the prior swing high on a closing basis, right? If we have an inability to get above this, right, sellers get the advantage and they get it pushed down, possibly for a test to the 50 retrace, and if it gets ugly, for a 62 retrace, right? But there's a flip way to look at it, right? Think of all the people who've been in here and were waiting for the pullback or waiting for a retrace to get launched back to the upside. Now, the market's not doing horribly, but if you miss this lift here, right, and the market is showing potential for a move up, there's two types of shorts that are sitting in the market. There's cash shorts, meaning long cash, in which essence puts you short stocks, right? Or there's actual physical shorts. I think the bigger danger is those that are short cash in here, right? If they can't get the pullback, they're going to be forced back in above 2094 and 3/4, and forced back in. It can really provide a lot of rocket fuel for a move, I believe, to the old highs potentially, or and higher, right? Additionally, so the same applies, right? I want to stay flexible mentally. The same applies on the downside. If I can get a gap and they can't fill that gap, we get a gap down, open drive lower, that leaves us open to coming back and re-auctioning these areas right down in here. And then, of course, the 50 retrace, there's an open gap right over here that needs to get tested. I believe that's 2008-50. You have the 50-60 retrace, the larger picture 50-60 retrace, and the 62 retrace, which is the 62 retrace makes a lot of sense. It's right at the top of an open gap, and then we have just below 1950 a open gap sitting there that's waiting to be retested on the downside. But again, I think the risk is actually to the upside and not to the downside. Sellers had a big opportunity here in a thin week to really push the market down, and they were unable to do so, and those end up acting as markers for the push. The other thing that's pretty critical here is if we look at NQ. Okay, so this is an old trend line I have of NQ, and you can see we rolled over from the high. So let's get you a bit of a better picture here. So I want to be clear as to what I'm looking at. I know this isn't fast, but it is important. Bring it in. Okay. This is the old year-to-date high. It sits right here. All right. We broke above it, and we've been basically dancing on this 46.77 3/4. For me, if NQ is not trading below 46.77, we're not trading below 46.77, I am highly unlikely to push the short side. I'm highly likely to look for long side entries for pushes back up. And as you can see, again, on the day when we had the Russian news, this produced a push down right here, but we've been unable, even from the swing lows in October. So there's two key elements here. You'll notice the swing low in October put in a higher low on this move back down. If we look at 50-60 retrace, even from that last swing low, should line us up right here to the current swing high, right? That puts us at 4,400, just under 4,400 for a 50 retrace, and there's an open gap here. So, in my eyes, until NQ in particular can get below this particular area, every move down in NQ and ES will result in something like this, whether it's intraday, over multiple days, or even on a 24-hour chart. We're going to continuously end up with these V-shapes, and I want to focus on trying to launch my trades from these V-shapes back up. Long side is simply easier right now, and this is not a case of getting bullish at the high. I've been saying that since back over here. I've been leaning predominantly to the long side, and until we fail to get responsive buyers out of this 50-60 retrace, I know that somewhere in here in my trade planning that we're going to get 1 or 2 days where we just have nasty down days, but the majority of them will be like this. And I don't want to play for the 1 or 2% of the days straight down. I want to play for the hooks back to the upside where shorts get trapped, late sellers get trapped, forced back in, and I can write it back up. Also, worth noting in the morning, since I may not be here, if we gap down and we have an extreme negative tick, meaning in excess of negative 800 on the NYSE tick, the most likely result has been, over the last few times that we've had that, has been an almost immediate push back to the upside because we're back in a situation where buyers are in control. I definitely would not want to be a short with an opening negative 800 tick, right? And certainly looking for buying opportunities on a strong gap down have consistently resulted over the last couple of weeks in consistent pushes back to the upside. We've had very few closes on below the day. So anyway, let me see if I can't draw this to a close so everyone understands. Key in this, all right? Keys for the week are, can we get above and hold above 46.77? Can we close above on ES? I go over here. On ES, can we get above that 20.94 and a quarter and hold? Lots of stops to be taken out above, okay? And we've been consolidating energy in a very tight range. That sets us up for a break from balance, which usually results in a large directional move. That move can be up or down. One of the keys to watch for there is the gap out of this range, and then a drive higher or a drive lower from there. So it can go either way. I'm not a fortune teller. Right now, buyers are definitely in control, and the place I prefer to be is on rotation size, specifically of 6 to 10 points down at key locations, meaning at the support resistance zones, which are, let me go through and cover those real quick. So, again, from key rotations down, first time into the zone, I expect pushes back up. Even if we were to have a trend day down, I would expect it to work something like this all the way up, right? And what you need to decide at each of these zones is how long you're willing to wait at each of these zones to get what my initial targets are, generally 6 to 8 ticks off of each of these zones and then move trailers up depending on how far we are pushed down. On the short side, right? If we're trading above this 2094.50, I still expect rejection out of each of these zones, but my one requirement is that this moves extremely fast in other words, we come in and we reject almost immediately, or I'm out of the trade. I'm not interested in fighting a strong move to the upside. And then also, importantly, and I've been stressing this over the last couple of weeks, I am not looking for end-of-day shorts. As you can see, the majority of the week, trying to push down anything past the early morn simply has not worked over and over again. We've simply pushed it for the prior week. We simply have example after example of pushes to the upside, and for me, it's best to be patient and wait for that opportunity to make money. So anyways, I think I spent a little bit too long going over all of this. Trade plan: first touch of zones, target 6 to 8 ticks, stops generally 2 points behind the back of the zone, time span 5 minutes to 20 minutes in each zone prior to closing out. And again, I posted the webinar for members on how we determine what the best strategy is for you, and also the further it's important in that, guys, the further we dig to the downside, the more patient I am at the zones to get a push back to the upside. One other thing that I want to remind everyone of is we're looking for tick divergence on a 1-minute NYSE tick chart to gain an edge on the downside for a long side trade. And I again want to emphasize, I think long side trades are better than short side trades. So anyways, that's it. I'm pretty tired. Spent a lot of time in the water today, and I'm going to wrap it up. If anyone has any questions, please send them to me over the private Twitter stream, email, and I'm going to post this for the general public. Hopefully it will help. I hope everyone has a great night, and we will talk to you all later. Have a great week, guys. Hopefully I'll be back for the open tomorrow morning, and we'll see you all soon.